Everyone is asking the wrong question. Is this a crisis that will permanently change the market? Or it's just another cycle? Because depending on how you answer that, you either panic or position. Markets do not simply go up or go down. In fact, they move in cycles. And if you don't understand the cycle, regardless of what triggers it, whether it's a war or financial stress or even global shocks, everything feels random. There are 4 phases in every real estate cycle: recovery, expansion, hypersupply, and recession. Then the cycle resets. If we look at the house timeline since 2008, the last hypersupply phase was between 2014 and 2020. And from 2020 until recently, Dubai was in pure expansion. Prices rising, demand strong, liquidity everywhere, and it's a clear seller's market. But now that phase is ending, and we are transitioning into phase 3, which is the hypersupply phase. Phase 3 is misunderstood. It's not a crash. In fact, it's a pressure building inside the system, where the supply starts to growing faster than the demand, and the prices growth slows. Liquidity becomes selective, and buyers shift from emotional to analytical. And here is the real issue. In 2017, there were less than 6,000 agents in the market. But today, there are more than 33,000 agents in the market. And majority of the industry, which is above 80%, entered during one phase, which is the expansion phase. And large portion of these agents have averaged 1 to 2 years of real experience. And they have never operated in a market like this. And they have seen only a demand chasing supply, not a supply chasing demand. And when you combine that with the rising supply, you get something very specific. More agents fighting over few real opportunities, which leads to price pressure, commission pressure, and transactional behavior instead of real advisory. And yes, on the demand side, we are starting to see early sign of softening. Transaction velocity is becoming more selective. Short-term rentals performance under pressure, and demand growth is no longer accelerating at the same pace. But on the supply side, short-term units are shifting into long-term rental or even returning into resale. Off-plan supply is being delivered and more owners are considering exit. Now at the critical layer, which is the financial pressure and the over-leveraged owners with multiple mortgages and income dependent on rent to sustain the portfolio. This creates something very specific, not panic but forced supply. And this is how phase 3 evolves into phase 4. Not a collapse, but a reset, where a weak positions exit and stronger ownership takes over. And this is where the real shift happens. The seller psychology, denial, resistance, then pressure. On the other hand, the buyer psychology, waiting, negotiating, then selecting. So we go back to the question, is this a normal cycle or a structural shift? The answer is, it is a cycle, regardless of what's the trigger, but with a structural stress layered on the top. This time there is additional pressures, higher dependency on short-term rental, more investors-driven segments, and a population with lower long-term commitments. Even the perception of stability is being tested. And this is not the end of the market. In fact, this is the phase where the system is tested. And in this phase, the winners are not the fastest. Matter of fact, they are the most precise. And at Arc Lens, we don't chase the market, we understand it.